Thank you for joining me. I'm Alex, and today, because of popular demand, we're doing Discover Financial Services. So we had American Express yesterday, and figured it would be a good comparison, as I said yesterday. So they do the same thing. They mostly have the Discover credit card. Current price is $83.04, which gives them market cap of $26 billion, so about a quarter of American Express. Dividend yield 2.1% with a 19% payout ratio, which is amazing for two reasons. Number one, the dividend yield is 30% higher, and for one, the payout ratio is about exactly the same. So revenue $10.7 billion, earnings $2.7 billion, which is a very nice net margin and decent earnings. And they're up 30% year over year, but in the trailing 12 months, it's not up that much more. So pretty steady from there, which isn't bad, obviously, especially with a PE of 9. So total assets, $110 billion, slightly up. Total liabilities, $98 billion, also slightly up. And total stockholders' equity of $11 billion, up slightly because 9% of $100 billion, more than 10% of $89 billion. So obviously we have a company that's by market cap a lot smaller than American Express, but earnings are about the same. Assets are more than half. Liabilities are more than half. Equity is, I think, actually slightly more, but I have to look back at yesterday's video. So the PE is amazing. The payout ratio is amazing. The dividend yield is pretty nice. The revenue growth is okay. And again, in the trailing 12 months, it hasn't been that good. They're still growing, just not very much right now. So to sum that all up, I would probably like to have Discover more than I like to have American Express, because the dividend yield is higher with the same payout ratio. The PE is almost half of what American Express is, and the balance sheet looks about the same. So I would rather have Discover than American Express, but if I would do a very undiversified portfolio, I would say American Express is probably the safer stock, but this one is reasonably safe at this point, and so I would say that if you're reasonably well diversified, you can open a fairly big position here without worrying too much about it, especially since both stocks are fairly recession-proof. They're not losing a lot of money in a recession. People do default sometimes, but, that's kind of business risk there, and that's kind of the worst-case scenario. People still need credit cards in a recession, probably more so. Anyway, that's it from me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.